Eurozone periphery sovereign performance has received a remarkable boost in the opening months of this new year, with expectations that stocks will extend their rally into 2014. Here with more is Commerzbank's Peter Dixon. Peter, what has prompted these inflows?
I think to a large extent it reflects the fact that investors avoided large parts of the periphery from, say, 2011 onwards. As a consequence of all the problems that they were facing. I think there was a realization latterly that the sell-off in many of these markets has been overdone, that the Eurozone crisis is beginning to fade into the background in a sense, and that perhaps the relative cheapness of some of the assets in these markets represent very good buying opportunities. And I think that combination of events has conspired to generate a significant wave of confidence, and we're seeing investors coming back into this market in a significant fashion, and particularly with Ireland having already gone back to the market, to tap into the market to raise funds. I think that's a sure indication that many of these peripheral markets are seen as good places to be right now.
With previously stifled peripheral economies now enjoying more liquid debt markets and current account surpluses, and Q3 Eurozone GDP confirmed today at 0.5%, are indicators pointing to recovery?
Well, I think there are indications that many of the peripheral economies are lifting themselves out of the mire. I mean, if you look at the expectations for growth across the whole of the Eurozone, all 11 original EMU members plus Greece are expected to post positive GDP growth this year for the first time since 2007. So I think that's a very positive indication that we have turned a corner. I mean, whether we'll turn that corner very quickly, I think, is another matter. I think there's a long way to go, and many of these economies will struggle to generate rapid growth. But nonetheless, things are certainly a lot more optimistic than they appeared 1 to 2 years ago.
Does this periphery performance ease pressure then on the ECB ahead of Thursday's rate decision, as the central bank continues to avoid QE?
Well, yes and no. I mean, yes, obviously in the sense that an improving economic situation means that perhaps we're not in quite the same dire need of monetary easing that we were fairly recently. But I think that the real problem is that we have very low inflation, and that's the thing which the ECB is most concerned about. And with inflation having recently reached another low, there is pressure, I should say, on the ECB Council to do something to counteract the deflationary forces which appear to be mounting. But I rather suspect that the ECB will sit this one out and hope that over the next couple of months we'll start to see a more rapid rate of price inflation.
Eurozone factory prices fell slightly more than expected in February. What part is Euro performance playing in this scenario and in the greater outlook?
Well, there's no doubt that the strength of the euro over the course of recent months has exacerbated the disinflationary pressures which are impacting upon the eurozone. I think the ECB is quite concerned that with euro-dollar trading at or above 140, that's a line in the sand which is not too keen to go beyond. So I think if the euro maintains its current strength or even shows signs of going further, that might be the point at which the ECB feels forced to step in and do something about preventing the euro strength, which might mean some form of limited QE or other kind of policy measure simply to prevent the euro going higher, and we'll start to see hopefully a little bit more inflationary pressure as a result.
Peter, many thanks for your comments. That's all we've got time for right now, but don't go away, as the Dukascopy TV team will be back with plenty more exclusive interviews for you. Goodbye for now.